Hey guys, Joel usually does this, so I was sleeping at the wheel. Welcome back. We've got a special guest here today. We've got Fernando Oliveira from Brazil. Are you down in Brazil right now, Fernando?
Yes, I was born and raised here, and I
And
live
you're
here.
down there right now?
Yes.
So we're just calling all the way from Brazil here today. He actually wrote a book here. I actually had the privilege of being interviewed in his book, over 50 pages actually. I mean, I was surprised at that. Traders of the New Era is the book. It just came out a couple of weeks ago. It's kind of going under the radar there with obviously Lewis's big book, but it's on high frequency trading. And what's interesting about his book is he interviews human traders that are still succeeding in this environment, and he's basically talking about how they've adapted to the new world. So Fernando, how you doing today?
I'm doing good. Thank you. Good to be on the show.
So
Hey,
tell us a little bit about this book here that you wrote, Fernando.
So I was a poker player, online poker player for a really long time. And one day the US government shut down poker in America. And after that, the games got really more difficult. So the profits came down. And since I was a trader since 2007, I was like a position trader, longer term stuff. I decided that I wasn't gonna go like all out on trading, dig deeper, and go to day trading. And my first try at day trading in 2008 didn't go so well. I made some money, then I lose it, and then I paid a lot of commissions. So, and then the SEC shut down the prop firm that I was involved with. So it's like the government has a vendetta, it's always shut down my business. But then I decided that moving from poker, I was gonna interview the best traders I could find and learn from them so I could do it right. And that's what I did. That was the whole idea. It was me trying to improve my own trading.
I could have given you some good stories about Dennis.
Uh-oh, get the
Really?
inside scoop on me.
All right.
Yeah,
Actual,
yes.
go ahead, Joel. Were you
No,
gonna ask me
I was just going to say, I mean, how did you find the traders that you interviewed in the book?
Yes, I got in touch with like prop firms and I asked, hey, do you have like a top trader that you would be open to have an interview? So I went to Bright, JC Trading, and through one trader, then one trader recommends another. And I'm also a member of a chat room. In the chat room, I see guys who are consistently making money. I ask them, hey, are you open to an interview? And sort of go like that.
but you had some criterion when you were interviewing, right? These traders had to be profitable over the last few years, obviously. And what was that criterion? Talk to us about that.
The criteria was the trader had to have made more than $150,000 over the last couple of years,
In
and
every
to be,
year.
yeah, and to be around for a while. He had to have seen how the markets change. He can't just start like 2 years ago. He needs to be at least 5 years.
Now, obviously, the markets, there's been a lot of, talk since the Lewis book came out that the markets are rigged. What were you finding from the traders in your interviews there? Were they saying the market is rigged, or were they saying, like, because Lewis kind of focused on some issues, like I read the book and it was excellent, by the way. Like I was really learning a lot from a lot of the other traders that you interviewed there. And there was like themes in the book, but they weren't really talking so much about what Lewis was talking about. They were talking about, your limit order getting screwed around though, and not being able to, scalp and market making, lengthening time horizons. Talk about some of that stuff.
Yes, they talked about a lot of the sub-penny trades because that's a kind of a shady practice that goes on right now. They sort of take away a lot of the retail flow from the limit order books that doesn't hit there. They just internalize it and they give a really small price improvement in return. And that's really bad for the markets because it just drains liquidity. Nobody wants to post an order if you're gonna get sub penny all day long. So that was a big complaint from a lot of traders, sub penny trades, and a lot of them they just had to adapt to that. They just hit the bid or the offer now. They don't post
Take
orders.
liquidity.
Yeah.
Yeah, they're taking liquidity. That's and that's something that I've complained about for a long time, obviously. And actually, the SEC was there's an article in Reuters this morning talking about trade at rule where they would try to address that. But what I liked about your book is the traders aren't really they're complaining about stuff, but they're telling how they adapted to this new environment. And we can't control the environment that we're in, but we need to adapt to it. And that's what's awesome about your book. Like the 10 people that were interviewed is that they've adapted to this new environment. And how do they do that? Like what besides taking liquidity, how else? What other adaptations have they made to stay successful despite, a lot of the market, being, obviously on working against them.
Yes, there's a lot of little things that they do. And when I initially had the idea of the book, I thought I was going to focus just on the technical sides of how to adapt. But then I quickly realized that there was going to be technical adjustments, psychology, and risk management, because the profit margins of day trading have come down as a result of HFTs. So you're going to have these three things going on for you. Otherwise, you're going to wipe out the profit margins. So in terms of technical adjustments, you gotta have wider stops because there's a lot of noise. And one of the chapters, the guy from Nanex, Eric, he talks about how there's way more noise than there's had ever been in intraday. You see a lot of fluctuations back and forth that don't mean anything. They don't tell you anything. They're just the computers, chasing each other and battling each other. So you gotta be aware of that noise. Otherwise, you're gonna get caught in that shop. Another thing that can help to adapt to this current environment is hidden orders. If you're gonna post an order, at least make sure it's hidden, because that way the HFTs are not gonna go above you 1 penny, or they're gonna, put you in an adverse selection sort of situation. So for stocks like Apple or Tesla, hidden orders can help because the spread is very big. So if you're gonna hit that all day long, you're gonna pay a lot. But if you put a hidden order for 200, 300 shares, you can quickly get done and save a little bit. So that's another adjustment that they have made. And what else? Hidden orders, you gotta be, the best discipline that you can ever have, because if you're gonna be undisciplined every once in a while, you're gonna give back a lot of days worth of profits. And there's not a lot of profits for day traders as a result of HFTs. So you gotta make sure you have the best discipline you can. And I have a chapter in the book which is how to increase your discipline based on the latest findings of neuroscience and psychology and all that. So I think that's an adjustment that people have to make as well. And there's others. You want me to keep going?
You can keep going if you want. Like, obviously, discipline is something that we talk about on this show all the time. We were even saying it this morning. It's not how much you, don't enter the trade looking at how much you can make, look at how much you can lose. And obviously, and the other point that you made too was the noise. I completely agree with that. I mean, if you're trying to scalp and you're trying to trade short term in this trading environment, you're doing it wrong, because the high frequency traders have basically monopolized scalping. They've kind of monopolized the bid-ask spread. They're very good at getting the top of the order queue, and that obviously puts, the other guys the back of the order queue. So really that's, their big advantage is, being able to be the new market makers and scalp those spreads. But if you just lengthen that time horizon a little bit, that can really help, your profitability. And did you find the other traders doing that in your book, lengthening their time horizon?
Yes, a lot of them lengthen the time horizon. And when they do scalp, they do in very specific situations. They're usually like 1 cent spreads in very thick instruments like spiders, or like low price stocks, like $5 stocks. So that's the only situation they would scalp, because they found that in other stocks they just lose money all day long. And it's important to realize that the HFTs, they have very small profit margins, usually a rebate or something like that. And they have co-location, they have special orders, they have all kinds of things going for them. So if an average trader try to sit on the bid, try to earn a little bit of a rebate or save the spread, without those advantages, there's no way that he can earn that spread. So
there's no way he can be right? There's no way he can be profitable in the long run there, because the high frequency traders are just too advantaged there. So by lengthening that time horizon, they're kind of, almost, not competing with high frequency traders as much, correct?
Yes. That's one of the adjustments as well, avoiding getting the HFTs head to head. And one of the ways that some traders found that works for them is to go into the OTC markets. That's the way I do it, and that's the way one of the traders in the book does it. It trades a lot of Fannie Mae, Freddie Mac, because the Reg NMS doesn't apply to OTCs, you have less of the HFT activity there. So that's one of the things that works for me and works for the guy. And, you don't see a lot of the news algos there. You don't see some of there's still some, especially on Fannie. They have some spoof algos and everything, but it's way less. So you can have some profits by avoiding the HFTs there.
Who was that trader in the book that did that?
Is Fleming Kozak the first guy who made a lot of money on Fannie Mae?
Okay. I also I haven't read the whole book yet, but I noticed obviously trading Dennis back in his early days at Brighton. I also I traded with Jeff Goldman and Mitch Seaman at Oldie a long time ago. And they so basically and Dennis kind of started out as a market maker. Those two other guys were market makers. Could you just talk a little bit about their experiences from market making and how that made them the transition into prop trading?
Yeah, they were like veteran market makers, and one of the things that made them realize that they had to move away is because they had some of affirmative obligations. They had to step in sometimes, and when the spreads started to come down because of the rules were changed, they decided that hey, market making is not profitable anymore. We have to move away from that. And that's what the HFTs don't have these days. That's why they keep making markets a lot of the time because they don't have any obligation. They can just cancel. But the real market makers, they had it, so they had to stop once the spreads came down.
Right.
Yeah, like Jeff in the book, I think at one point in time says, because he's got an obligation to make markets, he had to make markets, and his firm, he had lost 400,000 on the one trade because he was obligated. He had no choice. He had to step in to provide that liquidity. Those affirmative obligations. That's what affirmative obligations are. They're the responsibility of the market maker or the specialist to provide liquidity when nobody else is willing to provide it. And you can get run over. In the tech bubble, a lot of guys got run over, even the financial crisis. But I guess we don't have the market makers then. But that's the big difference here, isn't it, Fernando? Is that back in the day, the market makers had affirmative obligations, and now all those guys are gone, and there's really nobody left with any affirmative obligations to be the buyer of last resort. So when high-frequency traders just sense too much risk, they just kind of turn their machines off, correct?
Yes, I was actually amazed that Jeff said that Knight Capital back in the day, they would display 100 shares, but they had to fill up to 5,000. So that's like impossible. You're never going to see anything like that these days.
Right.
So, these days they show 100 shares and you might not even get the 100 shares.
I don't even get the
So
Right.
it's
Yeah, you
kinda-
don't even get to 100 because someone is right in front of it. And I just think, Dennis, just to bring this all into the Flash Boys and, the stuff in Fernando's book, like you have a situation here. I mean, obviously you're going to have a volatile open. Dennis, you're going to be out there with your parameters. You're going to be out there providing liquidity. But what's going to happen at the 9:30 open is HFTs, there's too much risk. They're not out there. They're not making a market. I mean, you might get killed on some stuff. You might make some money on stuff, but you're out there making a market. And the thing is that, and unfortunately, Michael Lewis, didn't really impress upon this point is that there's they don't come into the market until there's no risk or very
or they
limited
really
risk.
widen the spreads far. And you'll notice off the bat, that's why we always say you'll have the opening print at 9:30, and then all of a sudden the spread widens way out. And it might be the high frequency traders offered way out, but they've widened those spreads so much because of the risk of getting picked off and losing money. So they go out wide enough where they feel comfortable to make markets where the spread is wide enough that it would overcompensate for any losses they'd have to take. So I agree. I think there's certain points of the day where high frequency traders are a lot less active, and we're very reliant on the liquidity they provide. So because there's no real market makers like Jeff Goldman, there's no real specialists too much on the floor anymore making active markets. So we're solely reliant on these high frequency traders. And when the push comes to shove and the risk is a lot higher, they're not there at those times. So that's the scary thing. So Fernando, what other themes were in the book? Just to continue on with the interview. So you obviously talked about lengthening the time horizon, trader psychology, getting out the noise. Was there any other predominant themes from the 10 traders that you interviewed?
Yes, more than ever, I believe that they make most of their money at the open and into the close, and midday has become even less profitable. So a key adjustment is to focus on those times and to make sure you're trading at your best in the open, the first hour, in the last hour, and avoid getting caught in the noisy chop of the midday, because in midday, it's mostly HFT activity that's going on. And if you do get involved in news plays, sort of things that brings human into the table, so you can actually make money from somebody. So that's another key thing that people were talking about.
Did the book? Do you think it helped your trading? I mean, overall, do you think that you picked up different themes? You think that a lot of people want to learn about the markets and get in. Do you think it helped your profitability?
Oh yes, because if you look at the books are out there on day trading, they're mostly talking about souls bandits and things like from 10 years ago. So there's nothing that teaches how to trade these markets. So it was very helpful, and I realized I had to take liquidity. I realized you can't show your hand no matter what. You have to trade the best peers. You have to trade the news plays and things like that, and have the discipline. A lot of psychological techniques that people use, like Dennis, he uses a lot of like little things to decrease volatility and make trading more sort of a relaxing activity instead of just a stressful activity. So that was very helpful.
I think the other predominant theme throughout the book, and which I'm just trying to tie all this interview together here right now, is it looks like the traders that are being successful are trying to trade not against the high frequency traders, but trying to trade against the traditional fundamental players. Because off the open, at the close, there's lots of institutions, lots of institutional action, lots of non-HFT order flow out there, and that's the order flow that is attractive to trade against. Because the high frequency traders are very informed, like we said, they have all these advantages. So you don't want a high frequency trader on the opposite side of your order. You want some long-term fidelity or something that, doesn't care about the short-term price impact. Those are the traders that, from a short-term perspective that you want to be trading against. So, and at the times of the day, like you're saying, perfect, in the middle of the day, it's all high frequency traders trading against high frequency traders. So you stick your foot in the water at 12. Well, there's not much happening. There's not much fundamental players out there. So you get your footbed off because it's just high frequency traders just trading around and trying to, scare you out. And they do see your orders, and it's important to protect your information as well. So I think, that's a big theme that I found throughout the book when I was reading it as well, is how your traders, trade, different times, but they're always trying to avoid trading against other high frequency traders. Is that what, did you find that too?
Yes, that's what something that some academic professors don't understand about day trading. They think it's all random. The guys who make money are just lucky coin flippers and all that. But there's actually a premia, risk premia that they're extracting because they can interact with these big fund managers. If you can sort of predict what these fund managers are going to do next by the charts, by the tape reading, that kind of thing, then you can earn that premium. You earn something by interacting and predicting what they're gonna do, and that's how the traders make money. It's not from the other HFTs because they just get too many advantages, but it's from the fidelities of the world.
Is there any other, like familiar? I mean, you interviewed a lot of different traders, or not a lot, but several, the five in the book. Was there any other, recurring themes? I think one thing, because like I know these guys, three of the guys in the book, and the one thing I see is just, it's important to have an opinion, but in the way the markets are, the way the volatility is, did you see a theme of them, trying to enter, each day, not opinionated, not letting the performance of yesterday or last week or a month ago, affect their trading for that day?
Yes, one of the things that I noticed that a lot of them don't take overnight trades because of that. They don't want to start the day with a position, with a loss, or you just start mentally attached to something, so they start the day fresh. So that's an important adjustment. And another thing that they do, pretty much all of them, is that they have a lot of trader friends that they're in touch with. So you can learn by watching your friends, just discussing strategy, discussing adjustments. That's the thing that I didn't have the first time around 2008 when I day traded. I didn't have a circle of trader friends that I could learn from, adapt, and all that. But these traders have. They usually are on Skype with each other or in a chat room or in a prop firm. So that helps. You can learn from each other, can discuss, hey, why did you short here? Why did you buy there? How did you work your orders? That kind of thing. That was another recurring theme that I found.
Well, we've had Fernando Oliveira on discussing his new book, Traders of the New Era, interviews with a select group of day and swing traders who are still beating the markets in the era of high-frequency trading and flash crashes. Fernando, all the way from Brazil, thank you so much here for the interview here, and we look forward to reading the book here. And if anybody in the chat, I've posted the link. It's up there on Amazon. You can just search on Amazon under Fernando Oliveira, Traders of the New Era. So thanks a lot, Fernando.
Thank you. Have a good day, everyone.
Okay. Thank you, Fernando.